What if retirement wasn't about saving money, but about creating income? Income that shows up every month. Income that arrives, whether you work or not. Income that keeps flowing while you sleep. For decades, people were taught one simple rule: work hard, save money, and someday, retire. But there's a flaw in that plan. A serious flaw. Because saving money alone does not create security. Savings can disappear. Savings can shrink. Savings can lose value. Income is what sustains retirement. Money that keeps coming in, month after month, year after year. That's the real retirement strategy. Not just saving, building income assets, assets that pay you, assets that grow, assets that continue working long after you stop. Before we go deeper, if you enjoy practical finance ideas that help ordinary people build real financial security, hit the like button so more people can see this video. It really helps the channel. Now let's talk about the reality most people ignore. Most people believe retirement is about stacking cash, saving in a bank account, saving in a retirement account, saving and hoping the market grows enough. But hope is not a strategy. Inflation quietly eats the value of money every year. 5 years from now, 10 years from now, 20 years from now, the same amount of money buys less, and then there are market crashes. They arrive suddenly, unexpectedly, and they can cut portfolios in half. Life also throws surprises: medical costs, family emergencies, economic downturns. All of these things put pressure on retirement savings. And when savings are the only source of money, retirement can quickly turn into survival mode. That's why smart investors think differently. They don't just save money. They build income streams. Multiple streams. Streams that continue to produce money no matter what happens in the economy. So let's talk about a powerful retirement strategy. A simple idea, one that wealthy investors have used for generations. Retirement hack by Income Assets. Assets designed to generate money, not just grow in value. Assets that send cash back to you over and over again. If you want more wealth strategies like this, subscribe to the channel. I post videos designed to help everyday people build financial security. Now let's start with the first income asset: dividend-paying stocks. When you buy a dividend stock, you're not just buying a number on a screen. You are buying a piece of a real business. A company that sells products, a company that earns profits. And when those profits are strong, the company shares part of those profits with shareholders. That payment is called a dividend, which means when the company makes money, you receive income. Even if you never sell the stock, even if the market is down, dividends continue. This is why dividend investors love the strategy, because the focus isn't just price. The focus is income, and something powerful happens when dividends are reinvested. Those dividends buy more shares. More shares produce more dividends. More dividends buy even more shares. It becomes a compounding machine. A cycle of growth. A cycle of income. A cycle of wealth building. Quick question for you. Do you currently own any dividend stocks? Drop a comment below. I read every message. Now here's something important. Not all dividend companies are equal. The strongest dividend companies have one thing in common. They survive recessions. They operate strong, stable businesses. Brands people trust. Products people continue buying even during difficult times. Some companies have paid dividends for decades. Through recessions, through financial crises, through global uncertainty. That consistency matters in retirement, because reliability matters. If you'd like a full video covering some of the most powerful dividend companies investors study, tell me in the comments. Now let's move to the second income asset: REITs. Real estate investment trusts. Real estate has created enormous wealth for investors over the past century. But traditional real estate can be difficult. You need large amounts of capital. You deal with tenants, repairs, maintenance, vacancies, unexpected expenses. REITs solved that problem. A REIT is a company that owns real estate. Large portfolios of properties, apartments, office buildings, warehouses, shopping centers, data centers, hospitals, cell towers. These properties generate rental income, and by law, REITs must distribute a large portion of their profits to investors, which means they pay dividends. When tenants pay rent, you receive income without managing properties, without fixing plumbing, without dealing with tenants. It's real estate exposure without the landlord headaches. Another advantage of real estate is inflation protection. Historically, rent tends to rise over time. As prices increase, rental income often increases too, which means the income stream can grow. Inflation is one of retirement's biggest enemies. REITs can help defend against it. If you'd like a breakdown comparing REIT investing versus owning rental property, comment below and I'll make that video. Now let's talk about the third income asset. High-quality bonds. Bonds are often considered boring, but boring can be powerful in retirement. When you buy a bond, you are essentially lending money. You lend money to a government or a stable corporation. In return, they agree to pay you interest, regular payments, predictable payments, and at the end of the bond's term, your original money is returned. Bonds may not deliver explosive growth like stocks, but they offer stability, and stability matters when markets become volatile. During stock market downturns, bonds can help stabilize a portfolio. They provide a source of income, a financial cushion, a defensive layer of protection. The key is focusing on high-quality bonds, not risky debt, not speculative investments. In retirement planning, the goal is not excitement. The goal is reliability. If you'd like a guide explaining how investors structure portfolios using stocks and bonds, I can make that as well. Just comment below. Now let's talk about the fourth income asset. Inflation-protected securities. Inflation is silent, but incredibly powerful. Every year, prices rise. Groceries, housing, healthcare, energy. Over time, inflation reduces purchasing power, meaning the same amount of money buys less. That's dangerous in retirement, especially when retirement can last decades. Inflation-protected securities are designed to solve that problem. These investments adjust with inflation. When inflation rises, the value of the investment adjusts, helping protect purchasing power. They are not designed for massive gains. They are designed for protection. And in long retirements, protection matters, because inflation never stops working. If you want a deeper explanation of how to build an inflation-resistant portfolio, let me know in the comments. Now let's look at the fifth income asset, income-focused index funds. One of the biggest risks in investing is concentration. Putting too much money into a single company, a single sector, a single idea. Index funds solve this problem through diversification. Instead of owning one company, you own hundreds, sometimes thousands. All inside a single fund. Many of these companies pay dividends, which means the fund produces income. Income-focused index funds specifically prioritize dividend-paying companies. The result is a diversified portfolio with built-in income generation. Another advantage is simplicity. No need to analyze individual companies. No need to constantly monitor markets. Low cost, broad exposure, and steady income. If you want recommendations for income-focused funds investors often research, tell me below and I'll create that guide. Now let's talk about the biggest retirement mistake most people make. They focus only on savings. They watch the number in their account grow. They celebrate milestones. But they ignore the most important question. How will this money produce income? Because retirement is not about account balances. It's about cash flow. Money arriving consistently, every month, every year, without requiring constant selling of assets, without depending on unpredictable markets. If this idea makes sense to you, hit the like button. It helps the video reach more people, and it tells the algorithm this content is valuable. Now, think about this for a moment. If you own nothing that produces income, you are dependent on market performance. dependent on employment, dependent on external systems. But income assets change the equation. They create independence. They create breathing room. They create options. Options to reduce working hours. Options to pursue passions. Options to retire with confidence. True financial freedom is not about luxury. It's about control over your time, control over your choices, control over your life. And that control comes from income. Reliable income, growing income. Income that continues whether you work or not. Retirement will arrive eventually. For everyone. The question is simple. Will you arrive prepared? Or will you arrive dependent? The good news is this. You don't need to start with millions. You can start small. Learn slowly. Build consistently. Income assets grow over time. Decision by decision. Investment by investment. Financial freedom is not built overnight. It is built one smart step at a time. If you want more videos about wealth building, income strategies, and practical financial ideas, subscribe and turn on notifications. I post content designed to help everyday people build long-term financial security. Thanks for watching, and I will see you in the next video.